In this video, I want to follow up on the cruise line video that we did yesterday. And yesterday I sent out a video highlighting Carnival Cruise, Norwegian Cruise Line, and Royal Caribbean Cruise Line. We talked about different option strategies that you could use on those different markets. And of course, those markets jumped up against today as they did yesterday. And so I want to follow up a little bit on those and take a look at this from a day trading standpoint. If you didn't put on your options, maybe you got up this morning and this is what we saw on a day trading standpoint. So first of all, just you can see on all three of these markets, they all had nice rallies again today, as anticipated after that first big rally. But I'm going to go through and look at them on a 1-minute chart. So this is Carnival Cruise, and I've got these all labeled for us here so you can kind of see how these go. And then these are the breakouts going up through the different waves of the Elliott wave pattern. Now, whether you're using an RSI or a stochastics or MACD or whatever you're doing, those indicators are meant to help you identify these turning points. And I'm just identifying the turning points here based on the pivot points and using the bulls and bears and the blue light crossover system. So you can use whatever indicator system that you want to use to try and help you identify these turning points. I like to use these tools. They help me the best. And so as we come in here, I'll just run through them quickly. I've already got them labeled for us, save us some time. But you can see first thing right off the morning bell, the market pulled back just a little bit, and then it started to rally. We got a break of the blue lights here, and then the market just kind of wandered sideways for the first, looks like about 20 minutes there before it finally broke and gave us that A2 and then took off and started to rip higher. Once this market started to move higher, it gave us the A3 here, which is just a little micro pullback, a little pivot point there. And then the A4 here as it came across and broke this pivot point. These are I call these pivot tops, little pivot point tops, where the market pivots and breaks across the top. And then as it rallied and continued higher, this would have been a new pivot point, but it started to fall and come back down. And then we ended up getting a dip, which is a yellow to green. Of course, the bulls and bears comes in here and pops those off and shows you where the yellow to greens are. And we look for a break above the previous high bar, and then this one took off a little bit, and there's where we got the B1 in here. So the B1 took off, and then these little pivot points are nice places to add on to your existing position. Usually we get in on these B1s and A1s. Those are our initial entries, and then we add on to our position at the A3, A4, or at the B2, B3, B4. As the market moves up, we want to dollar cost average into a position as the market rises, and then we exit the position at, in this case, X1, and in this case, X2. Those are our exit points. So as the market rallies up, we might add on a few small shares. Now, what I like to do is get in with the larger share in here. Maybe this would be a 500 or 1,000 shares right in here, depending on the size of your account, or your trading account. And so if I got in with 1,000 shares here, I might add on 500 here, and then 250 here, and then maybe 100 here. So as it moves up in my favor, as the odds become less and less that the market's going to continue to rally, I put on less and less, fewer and fewer shares as we get up there, up towards the top. So that's how I use these. Each number, a higher number, has a lower probability of success. So the higher the number, the lower probability of success. So that's why we decrease our quantity of entry as the market moves in our favor. All right, and another thing is when you dollar cost average up, if you dollar cost average up with smaller shares up at each one of these pivot points, then you don't dollar cost average up so high that it brings your market up, or brings your dollar cost average up to the point where it's easier for the market to just have a small retracement on one of these pivot points and stop you out just to take off once again. So that's why we do that. And then as we come in here, you can see this was a dip yellow to green. We had another yellow to green, and then we had a dip fail here where we were looking to go into the C stage of this market. So we had A, we had B, and generally we'll get a C. We'll get that third drive up, and we didn't this time. We got a fail, so we got a dip fail here, and the market turned red, and down it cascaded, and that was the end of that first Elliott wave failure. We only got the first two waves of the Elliott wave. The market did go through a little wavy, here in the afternoon, just kind of snaked along. Looks like, there could have been some small trades in here if you'd have been paying attention and watching these little small trades in here as the market broke some of these pivot points here, these blue lights. But nonetheless, let's come down and look at Norwegian Cruise Lines. So this is Norwegian Cruise Lines, and it looks, very similar, almost exactly the same as Carnival. The signals were just a little bit different. We come in here, and this one just kind of failed on the very out of the bell, off the market open, and so it came down and we failed, and then we finally had a crossover down here. This was an A1. crossover. Kind of a tough one. It was below the volume weighted average price, but nonetheless it started to rally. We did get a yellow to green bar in here. If you waited for that, as opposed to taking the crossover of the blue light, you can go on a yellow to green move, and then the market started to rally once again. So again, if we were in with 1,000 shares down in this region here, this is where we'd be maybe adding on to our position with maybe 500 shares, and then another 250 shares here, and then just getting stopped out on the X1. And then as the market came in, it gave us another crossover here. You can see another dip trade, a yellow to green, coming in with a arrow from the bulls and bears, and then of course our B1 entry right here, with the crossover the blue lights, and then adding on B2, B3, B4, B5. This one gave us a B6 before it came up and finally failed at this point, hitting the X2. And then we had a dip trade here where the market kind of rallied, and I thought we were going to go into the C level, and this says B7 up in here. That's actually mislabeled. That should be C1 right there, because that's a C1. As we're moving into the C level, the third drive high, so this is your Elliott wave, X1, 2, 3, 4. Looking at that third drive high to get C, and then C1, C2, C3 up in here, but it failed and came down and broke our X3 right there, and then that market was over. Once we break that X3, we toss the whole thing out. Now, again, coming in here, there were a couple of small opportunities. That's a red to green. We kind of skipped right over yellow, and then we had another small move right in here with a break, and then a yellow to green right in there. You can see another little move in there. But nothing really big out here in the afternoon session as we went into the afternoon session here. So that was Norwegian Cruise Lines. Now if we pop down here to Royal Caribbean, you can see it was basically the same thing. Once again, I've labeled this for us already so that we just save some time for us as we come in here. But you can see this is our A1, and it kind of broke that, came up, and it actually broke the blue light because the blue light flipped to the other side. We then had this kind of pullback into this little triangular wedge formation pattern. You can see this little triangle pattern right here. And then it broke out the top, going from a yellow to green once again, and then broke above this previous pivot point, giving us an A2 at this point here. And then this is where we start adding on. This is our A3. It's kind of a funny little A3 here as it came in and broke this pivot point, then had a little failure here, and then came back up and broke it once again to take off. And then it started to fall and come back down. We had our X1, so we just kind of basically would have exited here at the A3. And then as the market falls down, we have the yellow to green move, and then the blue lights break once again at the B1 point, and the market starts to rally and take off again. So as we come in here with the B2, this is where we have a little pivot point you could add on, another B3, B4, a B5, and then we get the failure at X2. This market came down and had a dip fail. We went from yellow to green. It only went up a few bars. It just went up just enough to break the blue lights to the upside, which technically, I guess, that is a C1, right? So a C1, and then, of course, the C1 failed, and then it cascaded down, hit our X3, and then the trade is over. Once we break that X3, all bets are off. So at this point, then again, you can come out here and see we had a yellow to green. We had a break of the blue light. Some small trades out here in the afternoon session. Nothing really big that catapulted up and give us an opportunity to do much. And it's coming in here. You can see it's kind of got a little rally going on right here, right now. So this is where we're at, just kind of watching this market snake through price and time here on the cruise lines.